Good morning. I hope everyone had a wonderful holiday. And so here we are, and more new all-time highs lurking above. Let's see what today could bring. It's typically a bullish day, the day after Thanksgiving. Volume tends to dry up pretty fast after 11 or so. And so far, got a little bit of a correction here. Things kind of fell there. What time was that anyway? 1800. Just right after the market closed, maybe some profit taking. Anyway, so you can see what's been going on here. Little retest and maybe a W kind of bottom. Always got to be a little skeptical of a retest and reversal pattern that formed after one giant down bar like that. But it was like after the market closed, so I don't know how much we could actually read into that based because of where it happened. But anyway, look, we're going to sideways consolidation here, right? See the depth of retracement, it came down. And so let's see how we could look at this. Anyway, so it retraced back up. What I was going to point out was that, we always have our analysis that just, it's just done the same way every time. And that's makes trading a whole lot easier if you have a plan or method where you can, look at things and say, okay, well, this is the process that I do next to determine objectively where I'm at. Is it really strong? Is it really weak? Now, so let's just forget it for the moment, that this was in front of the holiday and, it just came down like that. But we've got a big wide range bar. That indicates weakness. It should go lower. And you see it was consolidating down here at the bottom, but it didn't break down. Rather, it retraced. Did it retrace more than 50% of the drop? Yeah, it did. Just a slight little amount. But then it went all the way back down again and retested. So not a perfect retest, reversal and retest pattern or a W type of pattern. So right now we've got kind of a, let's just call it a trading range going on here. Right. And if we stay in this range here, it's going to be a pretty boring half a day for us. I'm not even sure if the market's open all day, but I'm not interested in hanging around here all day. So we've got a trading range going on. Here's our support level 31.42-ish and the top 31.55 or so. And above there, well, let's assume 31.60 or better. And down below here, well, maybe it goes down to 31, right? Well, the next level, 31.29.30 or so. And so what is this low? Our low had already tested. So that was the low of the day before the holiday. And this is probably that low right there. Absolutely. Which really wouldn't be any big deal if it went down there from the daily chart perspective. So what was resistance should become support. So 31.30-ish, give or take, that would be totally okay. And then again, if pullback is in the cards, let's just say for the moment, just kind of eyeballing this, and I'm not sure where the 20 MA is on here. Maybe I got it on here. Hold on. Where are you? Yeah, we got a 20 there. Let's see where the 20 is at. There you go. Right about where I thought it would be. And so if this was to come down, the 20 is going to probably come up a little bit. So this unfilled gap, this is where I would be looking for downside targets should that begin to play out. Got that unfilled gap there. So if it came down into next week, the 20 would come up a little bit, probably right in that area, which would be, okay, you're still in the area of minor support, and we look to be a buyer there because it's in an uptrend. That's in an uptrend. If it goes deeper, right? So here generally, when do you start to think that there's a probability that this move is over? It's simple, right? Simple. anytime you have a move that starts and rallies nicely, it's kind of a subjective word, nicely. What does nicely mean? Well, what it means is it gets a push above the prior high to where it's not a peekaboo above the high, like this pushed nicely above that prior high, which allows a pullback. I'm just kind of spitballing. Let's just say 40 or 50%-ish, somewhere around where support is that it should be, where things could continue to move up. So where do you think there's a problem? The deeper it retraces back toward where the move started, or what we call major support. So common sense says if this is strong, which it was here, if it retraces all the way back to where it started, something's wrong, and that begins to open up the thought of, could a head and shoulders top fail? We're not anywhere there yet. We're just trying to give you the thought process of how to follow trends objectively with some black and white rules, right? So sideways, strong, obviously straight up, stronger, normal pullback is okay. And this, we're starting to question the trend. Goes down here, trend is over. Real simple and easy to do, right? And Paul asking me about levels in SPX today, which kind of requires starting here. This was cleaner where we could see the overnight data. So pullbacks down to here, Paul, 3130-ish. I think the put spread side is probably safe with a little, leeway there. If it holds here, well, if it pushes up to new all-time highs, then we have to consider this level, 3140-ish, or somewhere a little below that. Right? You got 3135. That, yeah, perfect. Right? So let's see if this can pop up, which then we know has established this retest pattern here as a good level. Right? That should be a good level down to 3135. If this can push up above this high here, right, fine. If it can't, right, let's just say in the first 20 minutes or so, this pushes back down, well, then you should be looking up higher, right, where you're saying 3165. So those are good starting points, your numbers, and now let's see which way things go, All right, let's look at the other markets. By the way, Dan is not going to do his updated open positions on audio here. He's going to be typing, so he's posting in the room. And Qs look a bit different, huh? A little bit. Well, they came down hard and I don't know, lower highs here. So whatever. So far, it's a little bit of a correction day that's going on, but the day is just beginning. So we'll see what happens there. So there's a level for the Qs, and obviously the highs up there have to be the top level. So we've got a trading range since we've got a couple of retests down here. We've got lower highs, and as things are just contracting here, we'll see which way they go. And the Dow, more of a mess, huh? They had that breakout failure up here, nasty drop, holding these lows. So trading range there as well. And again, as you look at things intraday, you got to put it in the context of the daily. So here's a little lesson, takeaway, what have you. This is, as we notice and talk about relative strength, relative weakness, whereas we looked at the ES there, or we could be talking spiders, but look at this. Nicely above. It's just like a little peekaboo above. Right? And the momentum stalled immediately. That tells you that the Dow is relatively weak. Now you can go and look at the stocks within the Dow and see which is the dog that's holding things back. And maybe that's something worth a short or a call spread, or again, that could be just a starting point of recognizing in a very easy way without any indicators, saying, oh, you know what? The Dow's weaker. Maybe there's an opportunity there. If the Dow breaks these levels to the downside, well, if you're not going to short this, there you go and look in the Dow stocks and see which one is showing relative weakness. And then that one might be perfect for a call spread, a bear call spread. It might be fine for a short. We'll look at that later. All right. Russell, everything's down. Everything's red here, except gold is up a little bit. They're just hanging up there at the highs. It continues to be the strong one. And as we've looked at this time and time again, I've pointed you toward the ETF. It's got the giant void. It's broken out above the range finally after about a year of going sideways there, where the small caps look like they're going to outperform. They look good. It's holding up here. It doesn't look like the others. So let's go back to the futures. Just wanted to show the nice breakout here. Just hanging up there at the highs. So this was when I had marked out the range that it was in before it blasted off there through it. So now that range is done with. And it really should not even get back there at this point. It should not. So after a big move like this, a big momentum move, the thought process is it must create support, because this is the weakest part of the move. It went straight up. There is no support. So it's supposed to create support. And it's exactly what it's done so far. It pulled back a little bit. See these overlapping opens and closes right there. Buyer stepped up, and it's just chopping sideways there. So far, looking still bullish. And let's see if this was enough of a resting period that it can continue to move higher. The ideal scenario here would be for today to be a rest day in a pattern like this. Even if it dips down, let's even go so far to say it dips down and it's a red day. And you say, okay, red day, maybe it's going to go down some more. Surprise. Monday it opens up and it's a green day back up again, back to the races to the upside. That's where bar by bar analysis comes in, how you use that. I don't know how today's going to end, but if it was a red day, ideally Monday's going to be either a gap and go, or if it opens lower, buyers come in and push it up, and that would be confirmation looking for it to go higher. Right? So we'll see what happens, obviously. Oil is down here a bit, kind of. It's in a place where it just makes sense for sellers to show up. This is what we call a self-correcting uptrend. So here's the concept of, what time is it? I can go a little longer since Dan's not going to talk. In that, where's my little drawing tool? Let me get the spotlight here. Look, up, we talked about a trend being in question based on how far it retraces. So here's our major support since it went higher. It retraces about 80%. I'm just eyeballing it. But yet it goes all the way back up again. It goes back up and it takes out the high. So now this becomes our major support. And it goes sideways as if it's going to pop higher. And the son of a gun does a fake out, right? And blasts to the downside and rips right back up again, right? That's the schizo kind of price action, to blast to the downside, but then it comes right back up again. So this is what I refer to as a self-correcting uptrend. It kind of keeps you second guessing. So now it's at this resistance area and it's just chopping sideways. So this down bar right now, still early. It really doesn't mean a whole heck of a lot, but you can see what's going on. We go to the higher time frame and you see it's just kind of like churning within this range there. So multiple time frame analysis kind of brings clarity to something that is like, it's churning up, but what do I do with it? Look at how it acts. Can I actually trust that it's going to do something? You don't have to trust it. You don't have to even trade it. Move on to something else. Gold still flip-flopping around here with this move up and this churn down towards some support here. And, you know, it had that reversal day. It looked like it was going to go down. Now it's back up again. So clearly buyers are beginning to step up in this area. They have not taken control in any meaningful way. This is a nice gap up. And then obviously the markets are down a little bit, but it's got some work to do here. You know, can it get through this level here? And you got this messy stuff going on. So I don't, if it can get up to the 20 period MA, which is in alignment with this, that's going to be a good start to considering positions in gold, which may not be a good sign for equities. We'll see how that plays out. Silver, kind of same kind of messy kind of stuff going on there. So not much to say about that. Looks like Bitcoin's up here a little bit here, kind of bouncing off of the lows. And here's our greater than 100% retracement concept. And once it makes that greater than 100% retracement, you look for a stall in momentum. We talked about this, I guess, earlier in the week about the markets, and you can see how that relates to YM. After the greater 100% retracement, you look for a stall. Simple stuff. And we always have to look at the transports. Are they bringing up the rear? Or are they, as I mentioned before the holiday, keep an eye on these. Set an alert up here. Look at the transportation stocks. It's just like the Russell is bringing up the rear now. The transportation stocks could be what's going to bring up the rear if the markets continue to push higher. And what else? What else? Got a little push going on here on the internet stocks. We came out of this range. They were underperforming, and we're looking for these to continue to move up. All right, nothing here. Ideally up to this 140 level. That's what we have our ETF traders in. As it moved above this high at 136, not 136, above these highs right here. And whatever stocks are moving, since Dan is in Colombia, probably got some Colombian princesses holding him down right now. Roku, I thought that thing was going to hold into its gap fill, and it didn't do that the other day. As it gapped up, it couldn't hold on, but it's still kind of a churner with room to go. That's one I'm keeping an eye on to see if it starts to take off again. Facebook, it's been a kind of a dog. I don't know, I had a good day, but look at this self-correcting uptrend. I hate these. I hate them, right? Because they keep you second guessing. Up, all the way back down, churning, you know, red day, but maybe it'll keep going. You know, so as that FDN, which is looking good, maybe that'll help. Amazon, right? Straight up, right? It looked a little touch and go over here, made that blast off, and it looks like it's coming up into this prior high area. And financials were dogging it on Wednesday, you know, so they still look good. Let's just down a little bit. The Tuesday or Wednesday, they were just they weren't participating in the move higher. So maybe it's just slow and steady wins the race here with these financials. So Citi is lurking up there near that resistance, really not doing anything. Wells Fargo, so it looks like it can go. Goldman, yeah, just stalled at the high. And Morgan Stanley, that one looks good, right? If you can clear these highs here. Let's see if Morgan Stanley if markets can go up, it's actually down here a little bit, as you can see, gapping down a little bit. So that would be even better if it could actually clear those highs and get through there after a gap down. And we'll see where it's at 49.65-ish. Not a big deal, not a big deal at all. So a little minor gap down. If it can come back up through that, that would be a buy. If Morgan Stanley can get back up through Wednesday's high after this gap down, so you can keep an eye on that, would be a swing. And well, you can see on the weekly. See, it's really not much of anything there. When they come down like this, self-correcting downtrend, there's nothing there to really say, hey, there's just something of real significance there. So you just keep an eye on the broader markets, relative strength, weakness, what's XLF doing, and whatever stocks. You kind of like look at other things to see, is this thing continue to outperform? Yeah, Glenn, we covered the SPX levels before. Right, looking for, was it 31.35 and 31.65, but we'll see which way things go here at the open. Because they're down here a little bit. This doesn't show what's happening pre-market. So if you look at the spiders, it doesn't show any. We got to look at the futures. It's down here a little bit. So we'll see if it dips down. Right, if the futures would dip down, if you look at the spiders, if you don't have the futures, we could look at the spiders. If they were to break lower through here, well, then the upside should be safe. If they pop higher, the downside should be safe for spreads. Okay. And I think that's it. Any questions? What time is it? We got 5 minutes before the open. I just mentioned Amazon, Jason. Where is it here? Pre-market. It's kind of just hanging there, like the market is, but you can see it was a little lower and it's coming up. It's got room to keep going. As something is up 3 days in a row, same concept here, greater than 100% retracement is getting ready to stall. Doesn't mean it's got to stall immediately. It could go a little higher, and you can see what's to the left here. It's just likely, to take a little rest, but it's a great move off of the low. Right? And so maybe it gets a little lower before it actually begins to stall its momentum. And so we'll see. Yeah. And I think, I don't know, does the bond market close or the other markets close early? But I think, I'm telling you, after lunch, near the close, you'll probably get some jiggles, but is it worth hanging around? I'd rather go do other things in the afternoon, but the room will be open. Lita, JPM looks great. It's just slow. That's what I was saying. These financials, one of the days, I just remember where other things were moving, they weren't, but they've come up, they look good, they look like they can go higher. Ideally, since it's got this bottoming tail bar, it won't go back down there. What's it doing right now? It's down a little bit, 131.80. So it's trading within Wednesday's range. So what we want to see, and look at, it's only little dots there, not trading actively, but it's in the area of this support here. Ideally, just like I think it was Morgan Stanley was looking at, that's gapping down a little bit. If buyers will step up on the open and hold it, if it can get back through Wednesday's high, I suspect it's going to continue to go higher. Same with, so you can see this is kind of hanging out here. You got the bottoming tail, you got the correction bar. So that's good. It gives you a good line in the sand. And Morgan Stanley, more of a 3-day consolidation. So theoretically a stronger launching pad, even though this is, gap down a little bit, same story. You can see everything's down a little bit, so not a big deal that they're gapping down. Just, sympathy with the market. If it gaps down, well, it has gapped down. If it gets bought and takes out that high, it should keep going. So, yeah, things down a little bit, market's down a little bit. No real damage being done by the market here, being down a little bit, as you can see here on the 60-minute chart, just creating some support and resistance, a little trading range. Same with the S&Ps, right? They're just kind of like dead in the water here at the moment, really not moving much at all, but it's a 15-minute chart. We got a bearish 180 reversal, but still in an uptrend. It's not as if we got like if this pattern had formed in a downtrend, that resistance, we could think about it as a short. So it's in a trading range. For me, I look at this and say, I look at that pattern on the 15, and I look at this, and I'm like, I'd rather pass than look for this to do much on the downside. Anyway, guys, that's it. Market's opening here. Those of you in YouTube, have a great weekend, and we'll talk with you next week.